Welcome back to Alberta Prime Time, and the vocal point now, a long weekend and no surer sign of spring than higher gas prices. What will Albertans pay all summer long? That and what to do with your tax return. Our Monday Money panel is in now. Jim Yee is a financial educator and founder of retirehappy.ca. Russ Dratwa is a senior investment advisor with Canaccord Wealth Management. And Shafik Hirani is a director and senior executive financial advisor with Investors Group Calgary. Welcome back, everybody.
Thanks, Jen. Thanks.
Shafik, you had a bold prediction about the price of gas last week. Still holding on to that one.
Yeah, you know, I think gas is going to continue to get a little bit stronger in the next little while. But I think oil is going to start to go down. And usually gas and oil go in the same direction. But I think there's going to be a disparity between the growth of the two. There's a lot of tensions that should dissipate in the Middle East that would cause oil to go down. But the summer months and the spring months are always good for gas. So 8 of the last 10 months, gas has gone up. So I think gas is going to go up, oil is going to go down.
Russ, what do you make of it? An Easter weekend, a long weekend blip when prices at the pumps always seem to go up? Or are Alberta companies poised to rake in the cash all summer long and we as consumers pay at the pumps?
Well, short term, it's always supply and demand. I mean, you're not going to see them go down before the long weekend. But operating costs for when I'm interviewing my insiders, it's crude oil costs are like up fourfold in the last 20 years. I mean, it used to be about 25% of getting oil out of the ground. Now it's 50% of the price of gasoline. So that's not, the cheap oil is long gone. So,
Jim, you've taken a look at price breakdowns. Is there evidence that it has changed for fuel companies over the years?
Yeah, there was definitely some studies I found that suggest that the composition of pricing has changed. At one time, taxes were the biggest component of what we pay at the pumps, and now it's crude oil. It's the crude costs. So there's no question that the prices that we pay at the pumps are a huge reflection of the increasing prices of crude.
So are oil companies taking more in revenue? Is that necessarily because they're greedy, or as Russ says, it's costing them more to get it out of the ground?
I think it's primarily that it's costing more to get out of the ground. I think that the tax revenues have actually shrunk as a percentage basis, but on an absolute basis has increased overall.
You also looked at some of the price trends since 2006. We just keep on paying more. So especially when you consider household debt in this country, I mean, does it just go up and up and up and we keep paying and we adjust in other areas of our life for the money that's not there because it's in our tank?
Yeah, it certainly has gone up and up and up, and I would suspect it will continue to do so. You know, the demand for gasoline, the demand for oil will only continue to increase, not just here in Canada, but worldwide. We have now a whole bunch of new users in, you know, Asia, and so that's only going to foster more demand, which is going to put more price pressure on it.
Shafik, can Albertans tolerate high gas prices because it's good for our key industry, or is there a significant downside for all of us in general?
You know, I think you got to, and that's a great question, Jennifer, but I think you got to incorporate that into the general framework of the other factors affecting Albertans. Albertans' gas is, it impacts us, but there's a lot of other things like our debt, the tax rate. Albertans do pay the lowest gas out of any province in Alberta, and we have the lowest taxes. I think if you look at some of the other critical factors affecting Albertans, like real estate prices, the amount that we're in debt, there could be some significant impacts to the average consumer in Alberta over the next 6 months that hopefully we're prepared for.
Okay, well, that actually leads me into our next topic, which is potentially a tax refund. A lot of Albertans in line for one. Russ, many of us just look at it as free money. Go spend it.
Well, I mean, the emergency fund is the first thing I always tell my clients, make sure you have your buffer, always have your buffer. Different people, that's different things. Might be $1,000, might be $100,000.
Generally 3 months living expenses?
3 to 6 months is the general rule of thumb, but everybody's different. And then at the end of the year, when you see a surplus building, that's when you look at your tax-free savings account. That's when you look at your RRSP. That's when you look at your mortgage pay down. But make sure you have that emergency fund. And then splurge, perhaps, if all those things are covered.
Jim, should people invest it or use it as a refund? Let's just take spending off the table for a moment.
Well, I think it's a question of how conservative do you want to be. I think when you pay down debt, it's the sure thing. It's a sure rate of return. It's kind of like buying a GIC. There's no risk to that paying down the debt. Whereas if you invest it, there's still this element of unknown. We don't, we've seen volatile markets over the last 12 years. Some years they've gone up, some years they've gone down. The theory is over time it'll eventually go up, but that's not true for everybody. So,
Shafik, do people commonly put refund money in the wrong areas, even if they're trying not to splurge with it and spend it?
Yeah, and they commonly do it. And this is kind of a situation where if you got to be a little bit safe, and you also got to take a little bit of risk, because you can't just throw everything onto your mortgage. You can't just throw everything into your investments. Do a little bit of everything. Here's the thing: when you get a refund, the majority of the time it's because you threw money into an RRSP or some kind of pension or something like that. So if you threw 10 grand into an RRSP, you're going to get about $4,000 back. Just because you get that money back doesn't mean that you should invest it or blow it, because when you're older and you start to cash this money out, you're actually going to have to pay the tax on this money. So this is not generally a refund that you have now. It's more of a tax deferral, so you might want to be safe with that money.
Next up, what our Monday Money panelists are watching this week, and are perceptions about China's economy needlessly harming the value of our energy companies here. Alberta Prime Time returns in a moment. Welcome back to Alberta Prime Time and the Monday Money Panel. Russ, in your weekly newsletter, you're talking about frustration that an economic slowdown in China is hurting the stock value of Canadian energy companies. Tell us more about that.
Well, China for the last 5 months has been slowing down, but they're trying to control the rampant growth that was going on over there. And unfortunately, you never really know what's truly coming out of there. The news is very difficult to discern what's real and what's not. The irony is the U.S. has been showing growth the last 5 months. So unfortunately, we're so commodity linked. China's in deep need of what we have to offer, whether it's energy or metals.
As they go, we go.
As they go, we go, our markets. So that's something I watch all the time.
So is it affecting, resource companies, but specifically Alberta's bread and butter, oil and gas companies, is it affecting their potential to raise capital and spend? Is it to that point or not so severe?
Well, you're looking at oil and gas as more domestic. I mean, the metals is more what goes overseas. And what they need is, unfortunately, the markets are forward thinking.
Right.
So if the markets are slowing down, they're thinking China's slowing down, the market's not going to go up.
Don't buy that stock.
It's not going to go up, unfortunately. So buy it, but there has to be something. You have to know the underlying value. You have to get a dividend out of it. There has to be some underlying, because if their economy slows, so will our stock market.
Right. And what's China expected to do? Just contain its
8% growth, which is, anybody would love that 8% growth. But
Shafik, what are you watching this week?
Generally, you're going to see on Wednesday a lot of chatter about the housing markets, because the home prices are coming out. So domestically, we're watching that. And kind of like what Russ alluded to, I'm watching a lot of what's going on globally and how that impacts the Canadian currency. China, it'll affect the Canadian companies, but it'll also affect commodity prices. And that's where the driver of oil is going forward. So I'm watching what's happening with China and Europe and their debt situation.
What's expected on the housing starts?
Yeah, I think you're going to see a decline in housing, and that kind of is worrisome over these are the March numbers, and they're expecting a moderate and equal 0% growth over the last year. And if there's a decline, you could see a decline in the price of housing overall.
That is Canadian, though, right? And so I guess we could see something different for Alberta. Time will tell. You've flagged that one for us for Wednesday. Jim, you're watching bonds this week. Everybody is saying their time is up. Sell them.
Yeah, that's the message I hear over and over again. And
I think it true?
I think it's a scary message to be having. I think bonds, they're not designed to be a speculative investment. They were never designed that way. Certainly, bonds have had a massive run in the last 10 to 15 years.
As a safety net?
Well, but it's also delivered a premium above that safety net because of falling interest rates. So bonds look like sort of the savior to what's happened to the stock market.
Because for people who don't know, they're basically debt. You're buying other debt, and they'll pay you back.
Yeah, you're lending people money is what you're doing. The challenge now is that there's a lot of speculation that interest rates are going to increase. that being said, the speculation has existed for 10 years
Right.
too, and you know, we've been through this discussion and debate, and every time people have questioned whether interest rates are going down or going up, they've actually gone down.
Your take on bonds?
Integral part. I mean, the bond market is what moves the world. I mean, I watch that when I'm dealing with equities.
Spain right now.
Spain had issues getting. They were at quite a high rate last week to get money. So that again, Europe's back in the fray. But that's going to be 5-10 years. Most people anticipate. So, but the smart money that knows bonds. I mean, you buy a bond at point A and it matures at point Z. If you're not selling in between, there's no fluctuations. It's the mutual funds that you're buying and selling perhaps that might encounter a negative return because that's the way the bonds operate in higher interest rates.
Just finally as well, Russ, new U.S. job numbers, not spectacular, but some growing confidence south of the border. Time for investors to maybe weigh back in there a little more.
Well, the U.S. has been quite strong since October. If you remember, we were talking about the Valley of Death, perhaps, and that's the time to invest. And the U.S. markets are up substantially, about 30% since then.
So maybe you've missed the boat.
Well, U.S. banks and Apple are the two sectors that have really fueled that fire. So it's just, again, you have to be aware of what you're buying.
Shafik, new March numbers on world food prices show that they are up again. And I remember talking to you about a year ago, and you were telling us about how high food prices in part were to blame for civil unrest in several countries in 2011. They're up again. Does that affect almost all of us, even if not so acutely here in Alberta?
You know, Jenna, I'm glad you brought that up. And it doesn't affect the average Albertan or Canadian as much as it does the world. But it indirectly affects us because, you know, since we talked a year ago, prices have gone up drastically, and there's become a lot of civil unrest because a lot of the developing countries, they have to import these prices, and they can't afford to do that. So consequently, you've seen about 1 million people per year die just by starvation. So I really think that going forward, you're going to continue to see food prices, not just grain and wheats, but you're going to see cattle and all these prices go forward indefinitely as the population grows. So it's something to be concerned about when you're investing.
And not to sound cold, but the dollars and cents end of it is it affects volatility on the markets when there are, famines and as well civil unrest.
Absolutely, and not only that, but it also affects the economy as a whole. Like the North American economies suffer when food prices go up.
So, Jim, is there any way of knowing where we're headed? We certainly haven't seen them go down in Alberta. Certainly not painful for people here, but continually upwards.
Well, I think as from a micro basis, as consumers, you just go look for your deals. I was very pleasantly surprised this weekend when I went to Safeway and all the fruits and vegetables were on sale. So, there'd be some days where the prices seem high, some days, but there's no question the trend has been up. Inflation plays a role in our daily cost of living, for sure.
Right. Thank you all for your insights tonight. Appreciate it. Jim Yee is a financial educator and founder of retirehappy.ca. Russ Dratwa, a senior investment advisor with Canaccord Wealth Management. And in Calgary, Shafik Hirani, director and senior executive financial advisor with Investors Group Calgary.